Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep to Israel. Joel Elconin and Dennis Dick with you as always. It looks like we had our Labor Day rally overnight, so I guess a couple days early this year. We are up this morning. We'll talk about the reason why. We've got retail earnings still. We've got Tesla launching their insurance product finally. And our guest today, Ryan Detrick from LPL Financial. He is their senior market strategist. He would join us at 8:35. In the meantime, Joel, what is happening here overnight?
Major green on the screen, up 28.25 handles at 29.18, just off the high of the session, 29.19. So what a difference 2 days make. Pre-market high right there. I'm looking Friday's intraday high right back there, 29.27 and a quarter. After that, we talked about the top of the range at 29.40. Will it come into play today? Crude in the green by 53 cents at 56.31. Little bit of a rally here. Gold in the red by $1.40, just hovering around that $1,500 level. Silver still outperforming here over the last couple days, up 20.4 cents at 18.66. Bitcoin, who needs Bitcoin when you can buy stocks? Bitcoin futures down $220 at 9,525. We're going to bring in Triple D here. He's got a lot going on this morning, but he's going to join us here for a few minutes at the top of the show. Triple D, how you doing?
A lot of positions. I'm biased the wrong way in my day trading portfolio. So my overnight portfolio, I decided that normally I'm always hedged, but I stayed a little bit short. Mistake. Reason why was Navarro's comments last night. Spencer, give us those. But we have a lot of headline risk. So one headline gets trumped by another headline. Give me the Navarro headline first.
Yeah, we're not close to a deal.
That's what Navarro says. We're not close to a deal. I believe that was an interview with Reuters, was it?
Not positive.
Anyway, so interview last night, Navarro, we're not close to a deal. Stock market didn't really tank, but was down and got weaker off that. So we were down as much as 14 handles last night. Around 7:30, right after those comments came out, we're not close to a deal. So I was like, okay, well, I think when everybody really, gets a feel, because 7:30 at night, holiday week, I was like, they're going to come in and see those comments and they're going to hit this market. But no, China comes out with a better headline, positive. What's that headline?
They indicated
headlines on headlines.
China would indicated they would rather de-escalate than escalate the trade war. So rather than retaliate for the latest round of tariffs, they would rather just see those new round of tariffs.
Who was the person that said that?
This is from the Ministry of Commerce spokesperson.
What's his name?
Gao Feng.
Gao Feng. Okay, algorithm written. Gao Feng greater than Navarro. Write that one down. All you algo traders out there, I know you're listening. You HFT bots out there, write this one down. What's the name again? Feng greater than Navarro.
Gao Feng. Gaofeng. Gao Feng.
FENG greater than Navarro. So, anyways, because we got the negative headline coming from our side on Navarro. Positive headline coming from Fang, or at least positive for the markets. And we rip here 45 handles from the low. Another nice, tidy little 50-point overnight range. Mr. Elconin, what the hell did we do?
Well, for full disclosure, I canceled any bids I had in the market last night.
It looked ugly. I was scared. I actually stayed that short because I was like, we're not close to a deal. Okay, Navarro. Navarro is our trade. What is he? Just so to get it.
Trade advisor.
He's our trade advisor. Sounds pretty important in a trade deal. Says we're not close to a deal. Market says, we'll go with this Fang guy over there in China and we'll rip 45 handles. This market does whatever it wants, interprets headlines, whatever it wants. I would have thought all day long we'd be down, but obviously I didn't know this Fang headline was going to come. So this is why I'm a little bit grouchy this morning, because I would have thought I'm a headline trader. And obviously that headline came when I was sleeping.
Well, you can't sleep first of
Not
all.
allowed to sleep during a trade war. There's no sleep during trade wars.
But, and I will just say that if you had any kind of futures account, you could have had to stop it.
I got to be awake. You can't.
You could have had a futures order in there and caught it when it went to yesterday's high.
Gordon Gekko doesn't sleep during a trade war. Money never sleeps. It's my fault for going to sleep.
Okay.
Don't sleep.
Okay.
Bottom line, write that one down. Don't sleep. Don't sleep during a trade war. Holy cow! This is a rip my face off rally. Anyways, did not see this one coming. Up 30 handles here. Again, I retort. What do I do? What do we do?
Well, usually what you do, Dennis, is you minimize your losses.
That's what I'm doing. Minimizing the damage as much as I possibly can.
Okay. All right. And plus you got a lot of stuff to do around the house. You got to get the boat out of the water. You got to
don't even talk about that stuff. We're minimizing market damage here.
Well, and you can work Monday too. You don't get Monday off. We do, but you don't. You got to work.
Actually, Labor Day is in Canada, but they don't give me any holidays at all anymore. And I do have actually on that day penciled in to take my boat out of the water and clean it up. So that'll be the project for Monday. But continuing on.
Go.
What do I do with this next short portfolio here? Well, this is my trading portfolio, not my investment account.
I have no idea.
My investment account loves this. So maybe I should just talk about it today.
Now we're going to talk about
your investment account loves this morning, but fast forward 6 hours and who knows?
No, I know. Yeah, fast forward 6 hours, what happens? So,
I think we're going to stay green. So anyway,
we're going to stay green too. We're pretty green right now.
All right, let's go.
It's not easy being green.
Let's go into the retailer earnings parade. We've got about 10 or so notable retailers reporting between yesterday and this morning. I want to start with maybe the biggest loser of the bunch, OLLI's Bargain Outlet. And man, I did not see that. I don't know what the expected move was, but I don't think it was this big.
OLLI.
Yeah, they reported
OLLI.
Q2 adjusted EPS 35 cents versus a 46-cent estimate. Sales of $333 versus $339 million. So they missed on both of the Q2 numbers. And I don't know if they said something or what, but it actually bounced off the low. But even still, wow.
So here we are, trading down. We're doing pretty good. We're only down 23% now. We were down 27 last night. So the market helping us. So OLLI shareholders can thank Fang for their only 23% loss because it was 27 before Fang's comments last night. Continuing on our merry way down, though, this is taking out all support levels. I mean, it's down 18 points here. $100 stock 2.5 months ago is now almost a 2-for-1 stock split. I don't even know. When you're out of favor, you're out of favor. It's massively out of favor. You do have that one pesky little low of 59.72 back on December 28th. Does that hold?
Dennis, look on the bright side. You're not long OLLI's basement. So, things.
OLLI's basement.
Wait, what's it called? Oh, no, it's not.
That was one of those.
I always call it that. Why do I call it that?
Freudian slip.
OLLI's basement.
I'm just going to give you one number here.
The basement is leaking.
Pre-market low. Let me go here. Let me go to my data window here. And I mean, it's showing some support here. Pre-market low comes in at 55.50. So if I was short, I would be putting an order out there at 56, hoping it comes back down. But something tells me I might have to bump it up to 57 or 58 to get done. You got a couple green candles here. So that's it. I'd be buying ahead of the pre-market low.
All right, continuing on our merry way let's go with the disaster reports off the bat because lots of good stuff to talk today, but let's go with the ones that are bad. Best Buy trading down 4% here. BBY was trading up aggressively last night. Actually, I actually shorted it last night into this because it was trading up at 70. It went up to 71.70. It was trading actively up almost $3. I was like, okay, it's giving me a lead. The thing I did wrong was read the report. I went through the report and I was like, you know what? We're up so much. When it went initially red, I was like, I'm just covering this. There was a big bid at 68.5. I was like, it could bounce here. This is one of those, stocks. And obviously I didn't see the follow through weakness. So I did good by making it, but I could have made more.
Someone threw an odd lot up here at 74. So we're not even going to talk about that. We'll just talk about it being in the red. once again, going with the pre-market low, 63.75, and then you got a nice candle at 62.96 was your low on August 15th. So that's my buy area. I'm not shortening in the hole because, man, some of these stocks that have opened down like that, they've just opened lower and ripped your face off. This one also does have some overhead supply, but just keep an eye on that pre-market low. If it did get through there, I'd look for a bounce at 62.96. On the upside, you're trading right at the highs off the low. So let's call 66.45 minor resistance.
Continuing on our merry earnings parade here, we got two rippers. Dollar General, first one up $11. Person who was buying this one had it right. So the person who was buying Best Buy last night had it dead wrong. The person who was buying this up $5 last night had it right. Ahead of the report, trading up $4. And just before we go to Dollar General, actually, I'm going to go to Five Below first, because this was an incredible trading last night. This thing lost $10 and rallied all the way back. It's now up 8. So look at FIVE. Look at the range. It lost more than $10. I think it lost $12 last night. And I was looking at this person buying Dollar General. I was like, aren't they looking at the Five Below report? I guess they knew Five Below was going to turn around and rally like hell. Anyways, whatever they did, an hour later, Five Below is trading the green. Here it is in the morning. It's trading up $8. Unbelievable reversal for FIVE after taking out all support there early on after the report. Crazy movement.
Yeah, Five Below. So the numbers there, the EPS beat by a penny. The sales missed $417 versus $421 million, and their Q3 EPS guidance was light. Their full year EPS guidance was also a little bit light, but I think their comps were okay. I'm trying to, justify a reason for the move.
I can't. I know. Okay, so give us the numbers. So you say light.
Okay, so the Q3 EPS guidance they gave a range, 14 to 17 cents was the range they gave. 24 cents was the estimate for that, and the sales guidance for the quarter was also light, 369 to 374 million. That's the range that they gave. 376 was the estimate. So light for
both. It looks like they're lowering guidance on both cases.
They were light for the Q3 guidance, yes. And they.
What about full year? Was the fiscal year good or something?
The full year here, yeah. The full year EPS guidance, they gave a range of $3.08 to $3.19. I actually don't have an estimate for that, so I don't know how it compares. And the sales were around $1.88 billion is their guidance.
This is a head scratcher for me too. I looked at this and initial report, and I was like, oh, it's a miss, getting slaughtered.
So
look at it 2 hours later, it's green. Look at it the next morning, it's up 8. So I don't know. Loses $10. Now it's turned around 18 points. It's rallied 15% from the lows.
JP Morgan is out here this morning raising their price target. Maintaining
well, they're just chasing the price action, but
okay. Well, they're maintaining.
I have no idea why it's up, and fundamentally, doesn't make any sense to me at all. Obviously, there's something in there that I've missed. Maybe not. Maybe it just does what it wants to do, and they decided they wanted to start buying this thing back. But lowered guidance for next quarter. Well, just rally at 6%. I have no idea. This market is so disconnected from fundamentals. In some cases, it's very hard.
Okay, let's take a look. Two stock. We just did DG and Five Below. Dollar General breaking out the new all-time highs. What can you say? I'll give you the highs of the pre-market session. Boom. 153.21. That's a new all-time high. You're only $1 away from that, so I use that as a target. And if we start to roll over, I don't know. The low since is 146 since after the report. So actually 144.40. Well, 144, but those are not very good numbers. Sorry, folks. Don't know what to do when the stock's up $11. Also, the other one was Five Below. That got below 107. That went to...
It's up 20 points from the lows. Yeah. Almost 20 points, 20 handles.
Okay.
On light numbers.
I like two numbers on the upside. I like if you feel like you have to sell this stock today, 126.71 and 127.32. That 127 splits of highs from the middle of July. After that, 128.56. Just real quick for who is it? I think it's OLLI. Yes, is asking about Autodesk from yesterday. That one did have I don't know how much it got through the pre-market low.
Rally too, buy the dip all the way.
It got right near the pre-market low and then rallied like you know what. I just keep an eye on the close from that yesterday. That's 140.08. You're trading up $2.08. So I'd stick with it as long as it was green today. If it went, if it went red, I'm sure you're going to find some buyers, but just hard to find support. And you got a gap to fill the 148.69. So if you think it's going to go right back up and fill the gap, and get your order out there, 148. Let's call it 148.5. But tough call there. But I think Autodesk good to go.
Yeah, I thought it could continue the weakness. Wrong, obviously. Buy the dip rules the day. I mean, buy the dip has been ruling this market for 5 years, so I guess you know why. Fight buy the dippers here. Anyways, you can tell I'm in an awesome mood here this morning. So let's continue on. There's a lot of other earnings, those reports here.
Well,
where do you want to go? It's actually, this is one of the bigger days because we're coming towards the end of earnings season. This is a big day.
Oh, and we have end of the month too. But I just want to say one thing. The last thing on Autodesk here, you know how we talk about the pre-market lows and highs? Well, the pre-market low on Autodesk was 130.22. So if just in a blind of blind of faith, you bought that 130.22, you only had to take heat to 129.70. So just use, once again, I just want to, how we like to use these pre-market highs and lows. All right, go ahead.
Guess who's up 15% this morning?
Beyond me.
Guess.
I think he was using the pun.
I was. Yes.
I got it.
Okay, thank you. GES had earnings after the close yesterday, and they were good. Q2 adjusted EPS 38 cents versus a 29-cent estimate. Sales of $683 versus $671 million. So they beat on both Q2 numbers. The Q3 adjusted EPS guidance, I don't know how comparable that is because it is light. And the full-year EPS guidance is in line. Actually, the full-year EPS guidance was higher. So higher for the full-year EPS guidance, lower for the Q3 EPS guidance, and a beat on the Q2 earnings results.
Good enough. That's what it is. Up 15% here. If I was long, I'd be ringing the register. I don't have the guts to short it simply because I've seen these things that go up 15%, go up 20% just for fun. I'd imagine you're squeezing them a little bit here too. I think the short interest is over 16% on this thing. So a little bit of a short squeeze. So a little bit of, a lighter version of LCI yesterday, although LCI did start to give it back eventually too. But I would be, if I was long, I see all those highs and that's just over $17. I'd be ringing the register in my opinion. But again, I'm not shorting because I don't know where the top is.
I do like, pre-market high 1774, boom, that goes right into the teeth of that spike high that you had on, where was that high? that's above that. 1740 was your high on July 25th. So you're hanging in there. You've taken it out. So I'd wait for follow through. If this is going to keep going, it's going to get over that 1774 pre-market high, go 18 bid and just keep on going. If you can't take out that pre-market high, you fall back under 17, maybe get back a little bit of this move here in GES. Sorry, I missed that pun, Spencer.
It's okay. It was a very good one, if I do say so myself. What about Burlington Stores? Up 10% here this morning. Also reporting EPS beat $1.36 versus $1.14. Sales beat 1.65 versus $1.63 billion. They raised their full year EPS guidance from the high $6 range to we'll call it they raised about 20 cents. We'll say that $7.14 to $7.22. That's their new full year EPS guidance projection. So about a 20-cent raise on that. The Q3 EPS guidance projection was also strong.
If there was ever an earnings season to buy straddles, this was it. Because I highly doubt it was a 17-point expected move. I got to almost go look myself.
Okay. While you do that, you
know what? These options are crazy. It's hard. Even on this move. Okay, the expected move was still $12. So, yeah, you're making money as a straddle buyer, but not much. Holy macro, man. These options are just crazy. You can't make money buying options long term. I mean, even in the good buying of option straddle season, it's been hard. It's been a hard gig. So, I mean, yeah, you could have maybe bought the calls and got lucky, but who knew? How do you know which way? It's up 17 points, up 10%. New all-time highs. How many retailers making new all-time highs? Find me another one. Are there any retailers? Well, Lululemon maybe?
Lulu. Oh, you took the words into my mouth. Lulu.
No, it's not. Is there any retailer making new all-time highs?
Man, I was looking at one yesterday.
I'd imagine you're going to see. I don't even know. I honestly.
What's Columbia Sportswear? COLM. Nope. Never mind.
Tommy Lackey in the chat with Costco.
No, not talking. I should have clarified further. Sorry, Tommy, you're absolutely correct. We have the Targets, the Costco's, the Walmart's not too far off. A Home Depot and Lowe's. I meant clothing.
He meant apparel. He meant apparel. That's what he meant.
Yeah, that's what I meant. Sorry.
There are no apparels at all time.
I meant apparel. Sorry, Tommy. Absolutely right. Target. I mean, Target sells some clothes too, but Target sells everything. That's Walmart and that. I meant one that focuses on apparel, which like Burlington's Discounter. Unbelievable, considering what has been done to mall-based apparel retailers. Burlington, still TJX. I guess they're strip mall. Maybe it's because they're strip mall, but unbelievable performer. You think about how bad Kohl's has been and how good Burlington stores has been. I don't know the difference. I guess Burlington's a little bit cheaper, but that's crazy. Crazy how URL straight up, go straight down.
I had to run out to Costco yesterday, pick up something for Lisa. They have samples during the week too, and there's no line. You don't have to fight for them. Like when they pull the stuff out of the oven, like there's a bunch of people standing there. Boom, boom. I mean, I wasn't even hungry for dinner. They had so many samples there, and the checkout line wasn't bad. 192 Burlington stores. That's where you look. You have someone maybe wants to sell a little stock there. You got up to 192 even, and then you bumped it a few times. So if you're looking for a target on the upside, 192, and I'm actually seeing some pre-market support in this at 189. So I think if you want to hop on this one on the short side, I think through 189, you might give a little back. So 189, 192 are my numbers here in Burlington Coat Factory, right?
That's what they used to call themselves, but now they're all upscale and they call themselves Burlington stores. I still like, actually, I don't go to a lot of stores, but that's one I take my kids to. And like I said, because everything's a disaster already in the toy section.
Yes, that store's a mess.
It's a mess, and so I don't feel bad when my kid destroys the toy section because it was already destroyed. So it's actually a good one to take your 2 or 3 year old kid to. They can play with all the toys freely there because they're all over the place anyways. I guess that's the key. Just mess up your store and sell stuff really cheap, and you kick butt in the stock market. Maybe that's the key. You have nice classy stores like Macy's where they're giving you fragrance when you walk through the perfume section. They sell the hell out of that. So you got to class down your stores. That's the key. Big Lots once they started class up their stores too, they started really going down. Big Lots used to be that same Burlington stores, and it's been a dog stock ever since. The market wants cheap. The market wants class down. And Big Lots started to class up their stores, and that's why the stock's been doing bad ever since. That's the key for a retailer. That's the whole formula.
We talked
about their stores.
We talked about $1 store. What
Walmart's a messy store too.
Walmart is messy.
Walmart's messy. Costco's just a zoo. So
Target's clean.
It's clean, but it's just a zoo. There's just so many people in there. I can't even move.
Yeah. What about the other dollar store here? Dollar Tree. They reported chart looks the same as DG, but their EPS missed and their sales beat. So it was a mixed quarter for Dollar Tree, but same story on the chart.
It's ripping. Dollar General's making new highs. Dollar Tree a little ways away from it. So it's getting a nice lift here on their earnings too. I don't know, these dollar stores, people like cheap stuff. You go in there and you buy something for $1 or $1.25 or whatever it is. I mean, DLTR, whatever.
Let's see here. Your pre-market high went to 106.50. I love that area. I mean, this one I can find some resistance. I'd be a little bit, triple top at just under 107. So there'd be a nice target. If it did get up to 107, got another high just above it, but that'd be resistance for now. If you don't get back, take out that pre-market high, get over 107. You could roll over a little bit. If you want to sell it on weakness, there has been a bid here at 104. If that bid disappears, look out. I think you could get back, $100. I don't know. Give a little bit of back, but 104, 107, early range prediction in Dollar Tree.
I think I found, is this apparel at all-time highs? Is it close?
What?
Boot Barn Holding, BOOT.
Somebody just said that one.
Did they? Oh, sorry, I did not see it. Did not see it in the chat. Scout's honor, but Boot Barn and
Yeah, that wicked little pop at 39.59, so it's not going to be at all-time highs. 'Cause I don't know what happened on August the 1st, but they bought it and they sold it right off from those highs. So
anyway, speaking of the apparels, Abercrombie and Fitch, and surprise, surprise,
Nice store.
what?
Nice store.
nice.
Yeah, they're okay. The stores are okay, but the quarter wasn't. They lost 48. Well, I guess it was. They lost 48 cents. They were supposed to lose 52 cents, so that's not. I guess that's a beat. Sales 841 versus 852 million dollars. So sales miss, and I don't know what you can say about all these apparel stores are the same.
Except they all price differently.
Well.
Anyways, Abercrombie and Fitch. I mean, we saw where American Eagle went. I've been saying that all along. I think A&F eventually follows suit. It's still $15 here. For that matter, I think Guess and all of them follow suit eventually. But Guess is going the other way here today and squeezing them a bit. Abercrombie and Fitch not squeezing them at all here this morning. You do have some support down there, $15. That was your low from August. We'll see what it does there. It's right there right now as we speak. But I'm not getting that excited about any of these stocks.
Some volume trading when it went down to $14. But ahead of that level, Dennis, you're looking at 15. I'm looking at the low of the move from June, 1466. That has to hold this morning, or we will test that pre-market low of 14 even. And I just figured I'd take a look at night. Macy's just continues to leak. It's up 27 cents this morning at 14.89.
Big pop for Macy's shareholders. Ring the register. You know what? Let's stop for a second. Some of the dogs were barking yesterday. I did write this down. It started with LCI, and then Michael's got a lift, a stock like MIK. You saw GameStop getting a lift yesterday. So some of the dog retailers were barking a bit. Sometimes that lasts for a couple of days. So maybe Macy's can show some life for a couple of days here. It's just a dead cat bounce, in my opinion. But that doesn't mean, the thing just went from $20 to $14. Could it bounce to 15.5, 16? Absolutely. Are those tradable bounces? Absolutely. So they are showing a little bit of life here right now. Long term, they're still looking like death.
We got a number coming up at 8:30, correct?
So you're telling me to cancel all my orders? What number? What? Stop.
There's always a number. Let's see.
Is it an important one?
I think it's GDP, isn't it?
Is that, man? You know what? I probably should. My economic calendars are. Let's see. What do we got going on today?
That's how important they are.
Yeah. GDP. Good call, Joel.
So we move on GDP, Joel? Tell me, do I need to cancel?
We can. We can. We're expected to come in at 2% from 2.1% last month. So GDP's out here in under a minute.
All right, I'm going to trade that number.
Yes, I don't know if you know, we have an inverted yield curve. I just want you to know that.
I'm pretty scared.
Okay.
Market looks scared too.
All right, 18.5 is where we're trading. Pre-market high 1975. That was a good year. Let's see. It's got 20 seconds before the number. Who cares what the number actually is? What we want to see is the movement in the market. 27.25 was your intraday high from Friday. That's actually the last number I had on my sheet. So I'm not very well prepared today. Above that, if you really want to look for it, I'm just going to say 29.40 because I don't want to rip off all those numbers from 29.37 to 29.44 So I just split it right in the middle. And also Ali S talked about 29.40.
2% in line.
Did we get a number? Literally, S&Ps didn't move a tick. Not a tick. Not one tick.
Move it.
Did we move a tick?
Move.
Not even a tick?
It just moved. It moved.
No tick?
It did. It went to 19. It's going 1875, 19. 1870.
Oh, okay. Well, this was I'm glad I didn't cancel my orders. I would have been like, why did I cancel my orders? Anyways, no movement here at all.
This goes to my
Crickets.
non-recession, non-inflationary thing, and just like 2% growth forever. That my theory. No recession, no depression, no inflation, just 2%. And I could live with that. 1.5%, 2% GDP. I know everyone wants 3, 4, 5, or else we're going in a recession, but I just think we're just going to muddle along here. 2%, 2%, 2%. That's why I'm not getting freaked out about my long-term portfolio and trying to buy it and sell it. I'm just kind of just holding in here. We should talk about hurricanes. Stargate picked up some hurricanes. Are they? What do they got? Do we got a name for any of them? You're mute.
The old mute trick. Dorian is heading towards Florida. Last I checked, was a Category 1. That means check on your GNRC, as we do.
Yep. And this is doing well anyways. You didn't even need to buy it. Just buy it. Look at that Generac going straight up here. Home Depot and Lowe's too. Is Lowe's continued? This is interesting. You hit that 110, but then you came back and you made a bunch of lows in Lowe's. Look at that. Gave you 4 shots under 106 here, and boom, moved up. Even gave you a shot there yesterday. I just keep an eye. If you're looking for another leg up here in Lowe's, 110.24, you're an earshot away from that. You're trading up at 109.97. Haven't hit it yet in the pre-market, but there's a nice target for Lowe's. So let's see. What else? Do we have any other hurricane stocks? Generac, Home Depot.
Generac
Lowe's?
is kind of the
the insurers, short side.
Yeah.
Like RE. So you can see what RE did yesterday.
That you had in
the reinsurers are the ones that get hit the most because they're direct, because obviously they reinsure. They're insurance for the insurance companies. RE is one you always look at. R&R is another one. Both got hit pretty hard there yesterday. So the hurricane trade was on yesterday.
Wasn't there one that you owned for a long time? And
AHL, it's gone off the board. It got taken over.
Oh, really?
I shouldn't have sold it. They didn't get taken over for much, though. Not much premium, I don't think. I can't remember, but it wasn't that great.
Okay.
I had it for a long time, and I watched it fall like 30% on that one hurricane. I was like, I'll never own a hurricane like reinsure again. You know, it's just sitting there paying you like 3-4%, and then it fell. That was on which hurricane was a big one?
Houston. What was the one in Houston?
Maria was a big one.
Well, anyways, I can't remember which one, but it fell like crazy.
Every year.
It was down like 30% a week. And I was like, I'm never owning a reinsurance company again. And I've never put one in the investment portfolio ever again. I trade them. I don't want to own them.
You know what? It's 8:33. Let's take a break a minute early here, and let's grab our guest, Ryan Detrick, the senior market strategist at LPL Financial. I'll go call Ryan. We'll be right back in a moment here with Mr. Detrick.
I need this time, so.
All right, welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, Dennis Dick. Now joined by, as I mentioned before the break, Ryan Detrick, senior market strategist at LPL Financial. Ryan, good morning. How these past few weeks treated you in the market?
Oh, well, first off, guys, good morning, and thanks for having me back. But it's been interesting, hasn't it? I mean, you know, now just this morning, futures are higher. It sure feels like we're just dominated by trade. Whatever comes out of Mnuchin or the president or China, seems like the way we go that day. You know, I saw an interesting stat. Yes, this has been a rough August, and we're bouncing today. But, you know, 11 days so far this month, all 11 sectors of the S&P 500 either were up or down. They all moved together. So really, it feels like we're risk off or we're risk on, all in the boat or all out of the boat every single day. And the last time we saw something like that was actually January of 2016, when everything was truly moving together. And we remember that was a rough month, but it was also near a pretty major low in February. So maybe that's the half class full way of looking at things.
All right, Ryan. So you sent us over some charts or graphs to take a look at here, and you like to look at different indicators. We're going to pull up the 12-month change in the Conference Board leading economic index. What are we looking at here, Ryan?
Well, guys, I am a technician by trade, but as a market strategist with LPL, I'd also talk about the F word. That would be fundamentals. And, when you get to it, all the negative news is out there. We can get into market sentiment and some of those things that suggest maybe we are closer to a low than most people might think. But the one positive is the consumer. I mean, the consumer makes up 70% of GDP. Retail sales are strong. Look what Target had to say. Look what Walmart had to say. Look what Lowe's had to say. The consumer really is strong. Now, we're fully aware the global slowdown we're seeing in China, GDP contracting in Germany. Maybe Germany's going to go into a mild recession, which could lead Europe into shouldn't laugh about it, could lead Europe into a minor recession. But boy, oh boy, guys, the consumer still is strong, and consumer confidence is one of the biggest parts there. Now, the contrarian would say, and as an old school option trader, I do worry about this, consumer confidence is getting some of the levels we've seen since highest levels we saw since the early 2000s, which from a contrarian point of view are a concern, although still I just think there's a lot of different signs. For instance, this month we're seeing the most outflows from equity ETFs we've almost seen in history. Okay, so I don't think that people are nearly jumping up and down about stocks like they were in 2000, but maybe people do feel a little bit more confident about the economy. And I know what the headlines are; they're scary, but the U.S. consumer is not really biting yet, and they're still opening their wallet, still spending. Wage growth is still over 3%. A lot of positives on the U.S. fundamental point of view, which to us says there's not a recession likely over the next 18 to 24 months, which is opposite what some people think, but that's the camp we're in.
Ryan, I feel like I've been seeing a lot of the last time this happened, 2007, the last time this happened, 2006, the last time this happened, 2008, just in the headlines. Do you get that sense as well? And how do you react when you see a headline that implies what it's implying, right? The last time it happened was 2007.
Right. Well, let's be honest. I think a lot of that is clickbait. I mean, you say things like that. I mean, I've probably been guilty of it somewhere down the line, too. Let's not forget 1929. I remember being on CNBC in early 2013, and that was, I think, one of the first time of, oh, my goodness gracious, this looks just like 1929. And so we've been hearing these things for quite a long time. There's two things I like to talk about when you talk about what's really driven the stock market for 10 years, right? I think it's the advanced decline line on the NYSE, and it's what the credit markets are telling us. Just keeping this real simple. The advanced decline line, to me, NYSE advanced decline line, yeah, it's peaked a little bit here, but it's still nowhere near major weakness, suggesting there's participation, suggesting there's still stocks that are going higher. And look at the credit markets. You can keep it simple. Looking at spreads on high yield spreads and spreads on investment grade corporate spreads, they're the average of where they've been the last 40 years. Yes, they're off the lows that we had, the historic lows last year. But if there truly was a bear market coming, if there truly was a global recession coming, my opinion is the bond market would sniff it out through the credit markets, not so much the yield curve, through the credit markets. And we're not seeing those spreads flow out. So again, credit markets are calm-ish. Advanced decline line is relatively healthy. This is just a consolidation, in my opinion, here. That is things we've seen for 10 years that have kind of just laughed in the face of all these concerns about so many things that are out there. Those two things matter, and they still look good to me.
I know when Dennis, when he talks about the financial crisis, he saw a lot of it in the he trades a lot of preferreds, and he saw some crazy things going on in the preferreds of some of these like the Bear Stearns and stuff, and usually when he sees that stuff moving into preferreds, it's usually a good tip off. What you're alluding to is the exact same thing. Let's talk about seasonality here. And yesterday, I guess I'm a little late for the Labor Day rally. I talked about the potential, the holiday, feeling good, to get the market up. But you look at things, you look at the S&P 500 on average monthly returns. What are we looking at here?
Yeah, guys. Well, we came into this month and we wrote about this and talked about LPL research. August, for whatever reason, is a rough one, right? I mean, in 1990, you have these big events that come out of the blue. 1990, Iraq invaded Kuwait. 97, Asian contagion. 98, long-term capital management, Russian ruble crisis. You get the 2011 U.S. debt downgrade, and now this year, the China stuff really, really flared up. So for whatever reason, August can be rough, and that's kind of what we're talking about here. The other thing to be aware of is, yes, September is another troublesome month. So purely from a seasonality point of view, we saw the S&P up around 3,000 coming into August, September/October. We said, hey, maybe some volatility, maybe a potential pullback as much as 10%. We've looked in history, guys, when stocks are 20% to start the year like they were in the first half of this year, or right around the first half of this year, you tend to see a double-digit correction. It's just kind of how things happen. So, that's kind of where we are. Now, here's one that I just kind of actually tweeted it out. I think it's interesting. I live in a world of compliance, so I have to use maybe and probably. It's a good assumption here. August is going to finish lower in the S&P 500 with 2 days to go, right? We need a massive rally. So if we close lower, guys, you go back the last 15 times, go back to the early 80s, when the month of August was lower, which is likely will be this year, the rest of the year was higher 15 out of 15 times. Now, I'll be honest. That's probably pretty spurious, pretty random, but it's pretty interesting. Let's not forget the last 15, this is where you guys are going to hate me. The last 15 times Ohio State played Michigan, Ohio State only won 14 of those times. We can't even top the 15 out of 15. You going to hang up on me now? Sorry, guys.
We're going to go into that in a minute. Other things, but you can't, the tape doesn't.
Can't fight the tape on that one.
You can't fight the tape on that one. Even, and I haven't tried to fight the tape on that one. Before we go into that, so the whole world is, wants our rates to go to zero and, the inverted yield curve and stuff. And the basis for that is because that's what is going on in Europe. And we should follow. But I look at the European economies and they're horrible. Why do we want to do anything that they've ever done? Why, we can't be competitive? I mean, doesn't the administration look at where the European economy, why do we want to do anything like Europe? That's my question for you.
Well, that's a great question. I think a lot of economists are asking the same thing. I mean, our take there is we probably don't, right? I mean, we've seen some of the things they've done. It hasn't worked. Look at Japan. I mean, Japan, for a long time, obviously, has had trouble growing and low inflation. They've had negative rates for a while. But our take, the yield, I kind of hinted at this stuff earlier. The credit markets are low. The yield curve, I mean, people have noted this. I've noted it. When yield curve invert for the first year, when I say the yield curve, I'm talking the 210. The 210 inverts, you tend to see outperformance. Markets tend to do pretty well that first year. Now, I'm aware you can have trouble down the road, but our stance for literally almost a year and a half now, we've been saying lower rates could come. Why is that? Even in spite of ourselves in the U.S., all the spending that we do and some of the budget issues we clearly have, in so much trouble around the world when, a couple of months ago when we're 2% on the 10-year yield and Germany's negative and Japan's negative and there's $13 trillion of negative sovereign debt. Hey, 2% doesn't sound too bad. Now that all these countries are buying our debt, I saw some numbers just this morning, record number of buying U.S. treasuries. And let's not forget, 6 months ago, we were saying, oh my goodness, China is going to start selling our treasuries in this trade war, and that's going to hurt us to push our yields higher. Well, hey, maybe China's selling, everybody else is sure buying.
That's a great point there. All right, so you got a new coach at Ohio State, right? And I don't know how many defensive players you've sent to the NFL over the last 4 or 5 years, right? You got a new defensive coordinator, which I'll tell you, I mean, I did not shed a tear when Greg Madison left because Michigan defense has not been doing so great over the last few years. And then I think for like the second or third or 3 out of the last 4 years, you've lost a quarterback, going in the first round of the NFL. So there's a few negatives here. So tell me the positives. I mean, the streak is a streak, 14 out of 15. Michigan's at home this year. Give me the right. And the other thing I'll tell you that if Justin Fields goes down, then they may be calling you to go play quarterback at Ohio State. So give me the positive. Well, I know the trend is your friend. Go ahead.
If Justin Fields goes down, I'm the quarterback. I guess I'll hand it to J.B. Dobbins 35 times a game. But you're right. I mean, yes, new coach, new leadership, but what kind of people talk about the infrastructure is the same. They've got a lot. I know you mentioned a couple new coaches, but the strength coach is the same, the recruiting guys. A lot of the infrastructure stay the same. And The other positive thing is that defense last year for Ohio State was like the worst in history. They gave up over 25 points a game. I'm talking 150 years at that school, right? So, I mean, the worst in history. They got like 9 starters back if you don't count Bosa, who didn't play all last year. The flip side of that is, oh, my goodness, you got the whole defense coming back. They were the worst you've had in a long, long time. But hopefully some new coaches, they can shore up the defense. The offense should be okay, like you said, as Fields. I mean, everyone, Fields was the number 2 recruit in the country 2 years ago behind Trevor Lawrence. He outplayed him in some of the all-star things. So we'll see. I mean, it'll come down to the quarterback and the defense, the line and everything else, the receivers. They should be pretty good there. But, we'll see. I don't know. I wouldn't be shocked if they won the Big Ten made the Final Four, but my goodness, I live in South Carolina, right? Clemson's 2 hours away. What Clemson's doing, it is just so tough to think you might make the Final Four, but everybody's playing for second with Clemson. And even in Alabama, Saban, boy, oh boy, he's going to be mad. So those 2 teams are just, they're going to be tough. But we'll see. It'll be a fun year. And this is the best time of year. We're all optimistic. I'm a Bengals fan, guys, and I'm not even that optimistic. But you never know. If Bengals are healthy. They were 4-1 to start the year last year. Then injuries destroyed them. So if they can stay healthy, who knows? Maybe we can have some wins in both my teams, Ohio State and the Bengals.
I'll tell you, the key to Michigan season, and everyone's talking Shea Patterson, Shea Patterson. Dylan McCaffrey. He may be the starting quarterback by the end of the year. Much better.
Wow.
I like him. So keep an eye on him. And if Tariq Black is healthy, look out. I don't even think Dale Green can cover him. But anyways, thanks for coming on.
Hey guys, I appreciate talking football and markets. It's probably the 2 things I like more than anything outside of my wife and kids, of course. But hey, this is fun talk. So guys,
right.
Have a good one. Look forward to the next time. Take care.
Have a great weekend, Ryan. All right, 8:47 here, Joel.
We're leaking. I mean,
don't tell me that.
I mean, what? We made a pre-market high in 1975, and we're at 17 and a quarter. I mean, we're 3 points, 4 points, still almost 4 handles off the high. But we'll say when you get this kind of reaction in the overnight trading, it's really important to take out that overnight, that pre-market high, 29.1975. So I'm not going to be trying to short it there or anything, but more if you take out that pre-market high, then you got a great way of continuing. If you don't take it, or don't get too faked out. If it goes 1975, then goes right up to 21 and then right back under. I like to give it a little room. So that's my number on the upside. My number on the downside, 28.9750 is mid-range on the session, and that's $9 above the high from yesterday. So I don't know. 2 areas of potential support, but on days like this, it's hard. It's hard. There's going to be a lot of bidders out there.
I want to talk about Tesla here for a little bit. I thought just by being on Twitter that Tesla had really big news last night because it was trending, and I saw a lot of people being angry at Tesla. All they did was they launched they rolled out their insurance product that Musk had teased back in April. I think he had said they would be able to launch in, I don't know, when did he say he would launch in May or June? When we finally got Tesla's insurance product in, you're always going to see negativity on Twitter, especially when it comes to Tesla. But I did see a lot of people say that they had looked into this product and it gave them higher rates than what they're paying now. I saw some positive tweets, but by and large, the sentiment on Twitter, for whatever that's worth, a lot of very angry drivers last night on my Twitter timeline.
They always hate Tesla. They just hate Tesla.
I didn't think
Twitter
that had drivers.
Yeah, that's funny. Yeah, the drivers of the non-self-driving Tesla cars.
Okay. Tesla's getting a little bit of a bounce here. You did have some accumulation in the stock, 211 to 212. You had buyers over the last 4 sessions. That's not doing you any good right now. Currently trading up 1.47% or $3 at 218.76. Look, I would have said before today the chart looks a little bit sleepy, so I'd be looking for a move out of here. A couple quiet days for Tesla. Pre-market high, if you want to follow through 219.39, that's your pre-market high. Pretty good volume is traded. Nothing up until 221.17. So if you're looking for a little bit more on the pop here, after that opens up to 225.
You want a reason why we're starting to leak here, Joel? TLT creeper rally here from the lows. We're almost flat on the TLT. That market, and we know the market has been inversely correlated lately with the TLT. So we were down over $1 earlier on the TLT. We have creeped our way back up, are down only 20 cents now. So I wouldn't be surprised a little bit of profit taking here. People watching this creeper rally in the TLT again, worries about the inverted yield curve spooking it a little bit here, but I mean overall we're still huge here.
Yeah, I keep an eye on the
I think
bond.
that's why we're leaking.
Keep an eye on the bond here. The 30-year, that's down 10-30 seconds at 165.26. I made a new all-time high yesterday. So what's going on here? Are we going to get Jason on
A couple minutes.
Couple minutes. Okay. All right. What do we have? Ratings. Oh, we don't have any. All the analysts are in the Hamptons, right?
Yeah, they're all on vacation. There isn't much at all. I mean, I'm scrambling to find anything of note. You noted a Bank America one, but they don't even care. I mean, there's a big note from Ray J on some of the banks, but it's not really moving much.
Right. Just to walk through that Ray J note, they downgrade Bank America to market neutral. That's the biggest name on the list. The rest of them are smaller names. So the Bank America downgrade was notable. Stifel downgrading G3 Apparel. Haven't looked at that chart in a while to hold. And the rest of them, it's all follow through on earnings. There's really not much to say. Everything is a reaction to the earnings report. So, yeah, very quiet on the ratings front, as you would expect for this week, since like Jill said, it's holiday week.
G3 here, 1942. That was your low from yesterday. That was the low of the move, and haven't been down here since you went to $18 in May of 2017. But doesn't seem to be. I mean, it's down, but not out today. So do we cover all of our earnings stocks here? Because I could go to.
I mean, more or less. There's always going to be a couple of stragglers, but yeah, I think we covered the biggest movers of the morning. The ones we didn't touch on. We didn't touch on PVH. We didn't touch on Box. We didn't touch on. Oh, you know. Let's do Nutanix. Nutanix is the on top of my up filter this morning, up 21% this morning here. And NTNX beat on their EPS. They lost 57 cents. They were supposed to lose 64 cents per share. Sales $299.9 versus $293 million, and they gave guidance that's not comparable because it was below the estimate there. So whatever they said was good.
Tough chart here. Been in a prolonged downtrend, getting a huge pop up 420 at 23.80, trading
at. It does 25.
What you say?
25, I would say, is my line in the sand here. That's where all that support was. June, July. Until we finally broke down. Maybe we get back up to there. And price as memory, I think we stall out 25.
Yeah, I'll go there. I mean, it doesn't look like the buyers are done yet. I mean, just on the 15-minute chart.
Still climbing.
Boom, boom, boom. I will say that I have 3 highs. Let's just call it middle of July, 25.15. That coincides with Dennis's number there. So we'll see. Good report here. But the chart, I mean, you had a little bit of a rounding bottom going into the report. Really prolonged downtrend. This stock in the middle of last year was at 64.87. Well, was it a week or two ago, Spencer? We had someone in the chat ask us about where the name Benzinga came from. And, no, it's not from, what's that TV show that people love? With Sheldon. Oh, yeah, it doesn't come from that. So we haven't talked to Jason Raznick in a while. Jason, sit down in the chair so people can see that nice pun there.
Oh, there's a video?
Yeah.
Oh, I'm sorry, Spencer. I didn't realize that. Okay.
Okay.
They tell me when you stand up, you enunciate better and you sound, like the Monday Night Football announcers, they stand up the whole game. And so I was trying to, channel that, but maybe I'm wrong. Okay. So good morning to the Benzinga PreMarket Prep listeners. It is great to be here. Thank you, Joel. Hi, Dennis. How are you?
Good. So we're interested because I don't know the story here either. How did we come up with the name Benzinga?
Okay. So naming a company is not easy. I own domains, like a bunch of other random like stock news sites and all that. I wanted to create a brand that we could go into other verticals and not just do the stock market. Wait till you see one of our new verticals in January. But the history of Benzinga, it's a made up word. like I used to say it means profit in like, Yiddish, Swahili, or whatever it was, I would make up what it means. But when I was in first grade, they told my parents I'd never be able to read. And I was this guy who's a guy who didn't talk until I was probably like 4 or something. And then I never stopped talking. So
Took my line.
Yep. I knew that was coming, Joel. That's how I was doing it. And so I would go to this speech tutor, Carol Golf, I think what her name was. And my grandfather and I would make up random words. Like we just make up words. Like, and we'd go to this little thing where there was like a little horse thing. You put a quarter in and I'd sit on it and like we'd make up words. And one of the words was very similar to Benzinga. And many years later, when I was coming to making up a name of the company, I'm like, this name has some power. It's early in the alphabet. So when you name a company, it's advantageous to have it to be an A, B, or C, because some sites, some places list you by alphabetical order. So the earlier you are in the alphabet, the better. Yep.
I never thought of that.
Yep. All the different, not all of them, but most of my names are all either A, B, C's, or D's. So you get listed. And this Benzinga is a word we made up. There's a couple of derivations of it. And I had another domain. I still have it. It was called Plamero, Plamero. That was almost the name of this company. And didn't do that.
It didn't pass the alphabet test, though.
It didn't. You're right. And it also sounds a little bit like a plumber.
Yeah.
Well, that's what I was. And then the other name I had, but I was like, hey, if this thing fails in the first 2 months, why like solving my family name? I thought it was cool because I thought of Rob Report, but it was going to be called Raz Report. RAZREPORT. I just thought it looked cool, the logo part of it. Less about me, but more about the logo. But then I just was like, you know what? This is a name that was like Benzinga. Now that show is out there that you alluded to, Joel.
Big Bang.
Big Bang. They came up with Bazinga about a month after Benzinga. We did a whole research study on it, and I was able to
stole it from you.
They basically may have stolen it from me. It's spelled differently.
You need royalties.
But I promise in 2020, let's say like 20 million people know about Benzinga. We're going to make this like 500 million people knowing about it. We just are in the process of releasing our new logo. We have an updated look and feel. You can see it in some places. It's coming out slowly, but we're going to have a big launch. There'll be an article for it. Benzinga has really grown in 2019 because of the amazing people that work at this company. I mean, we're lucky to have, look at this show. This show has been growing. Dennis, Joel, Spencer just do a terrific job. It's like, I even don't like using the word work, because work is like one of those connotations, like I have to go to work. We're a place here to build and like create and make money and figure out better ways to do things and get along and have fun. So Benzinga had a kind of like that little panache of like fun. Let's, and we use zingers, we use the different names and it has that feel. And I've always wanted to keep it that way. I always wanted to keep it so you're not like, hey, here's the big boss man. Now, this is a place, if you want to make your mark, you can make your mark. If you want to be different, you can be different. And so we do it our Benzinga way. And I'm not liking why is Box down so much? What's going on there?
He's looking at all the tickers. He's like, oh no, I own some of that.
Yeah. Well, yesterday it was terrible. So you guys know Shopify is up like 40% over the last 3 months?
Yeah, we talk about this one. It's the Canadian factor. I've been saying this for a while. It's the only big Canadian tech play. So you have all the Canadian money managers that like want to buy tech stock. They're going to buy Shopify. So you have a whole country that is behind it. It's like the Nortel back in 2000. Not saying it's going to become Nortel, but Nortel eventually became 27% of the index.
Is that like BlackBerry was back in the day, Research in Motion?
What's that?
Is that like how Research in Motion was back in the day, RIM?
Yeah, it was. It took over too for a long time before Apple came out with their, and that was the end. But
and then one more thing. So I wrote a story, or Randy here wrote a story on Shopify going up like 40% over the last 2 months. And you know what stock has gone down? In very similar, not very similar, but somewhat similar companies. Square does a lot of things with small businesses empowering their sites, and that's down 30%. And so it's just like a dichotomy of like somewhat similar. Square focuses on small businesses in the physical sense, retail, physical, and Shopify focuses on small businesses in the online sense. So I think there's like some, something where there's, are they going to go more online? Or is there an opportunity to, I don't know. That was just what I wrote something about. I saw that, I know Spencer was coming to kick me off, but not yet. Beer guy Free t-shirts with new logo. Yeah, we should do something, a little contest, give out 10 free t-shirts or something. So we're right now about to order the t-shirts with the new logo. Met with the guy yesterday, and we're meeting again this morning. So we'll do something with the pre-market prep, give Joel, Dennis, and Spencer some shirts to send out for some loyal listeners. I don't know what the thing is yet, beer guy, but
let me know what picture of me you're going to use on the logo, okay? Because I want to be able to approve it first.
Okay, so you think you got a pretty put on for the logo?
And just one other thing, Jason, he's mentioning Benzinga. Like when we travel, like as a family, I always like to wear like something that represents Michigan, or I have a ton of Michigan shirts, but I like to wear I wear a Benzinga shirt, and I'm going through an airport, no matter where I'm at, and they're like, "Hey, I know about Benzinga," and the name sticks with people, and it's just kind of fun, and so I wear the shirts, and they're free shirts, so I got the Benzinga Trading Summit, I went for the baseball game, so not as many T-shirts as U of M, but it's getting up there. Before we let you go, Jason, S&Ps are leaking a little bit here, helping Dennis up on the downside. Your Tesla here. I mean, we got to talk to you. We got to ask you about Tesla real quick.
Mm-hmm.
I know you're a big believer here and stuff.
Mm-hmm. Okay, I'll tell you. So Tesla. There's some good people in the chat here. Zach Brown, Matt. Nice to meet you guys. Good. I liked what you're saying, Matt. By the way, charting platform with Squawk Charlie and this and the pre-market prep integrating the platform. We got it all in one. I like these guys. They got some.
Smart. These guys are smart on here. These guys are good too. But they give
us a lot of trading ideas.
They're delivering digital gold right now. I mean, like that is freaking. Like I want to copy and paste this chat in the YouTube chat right now.
There's a lot of bots in there too, but that's okay.
Okay,
so they listen. Yeah, the high frequency traders are listening to us always.
Okay, so on Tesla. I told I have a friend who went really big into Tesla about 3 weeks ago at 231. What are we trading at today? I can't.
219.
So 219. There's no immediate catalyst for Tesla right now. There's no immediate catalyst. There's no reason why you need to pick up shares today. I told him this 2 weeks ago. He picked up like $20,000 that day, when they had the bad earnings. There is no catalyst because what is Tesla going to announce that people don't know about right now? Do I think there's going to be tons of catalysts? Yes. I mean, these guys, Tesla is so far ahead of these other companies. It's unbelievable. Wait till you see the pickup truck. When the Model Y comes out, the demand will be there. I'm still a buyer and I'm still a believer in the story. People do get, nervous about the Porsche or the Audi. I just think with Tesla's model of direct to the customer, not having all these dealerships, they are set up for the future. Like if Ford and GM are starting today, would they want to have dealerships everywhere? You guys realize when you have a combustion engine car, there's a ton more service. When you have an electric car, there's a lot less parts, a lot less service. The automakers make their money on the service. Tesla makes their money on selling the car. That's why the higher prices. I think there's things where they need to have a little more operational efficiency with Tesla, and Elon Musk needs to rein it in a little bit. But I'm still a believer. Do I sometimes take pause? Sure. But like I said this on the show 2 years ago, and Spencer Israel, or I think it was someone else at the company, talked to me after, Jason, that's crazy that you said that. You really believe that, Jason? He thought I was just messing around. The thing that I said is that in every parking lot that has over 100 cars, you're going to see a Tesla, and then you're going to see 2 Teslas, then you're going to see 3.
I've been seeing more.
Well, guess what? Where I park, I saw 4 Teslas there yesterday. Where I parked a year ago, I saw 0 Teslas. What's going to happen is there's going to be a lot more Teslas coming. This Model 3 pricing is, I don't know how someone buys another car and doesn't get a Model 3. I just don't. If I was getting a car today, I don't know what is a better car out there than a Model 3. I really don't, unless you're doing something else with it. You guys can rip me in the chat, but I just, and by the way, I am long Tesla. I own Tesla, so I just want to be fair disclosure. I'm not trying to pump up the stock at all. I'd actually rather it fall to 190, 180 because then I'd buy more. But what I was going to say is when you get enough cars there, I believe Tesla, you guys realize they're the only car company, to go create this thing, go put batteries in there. It's absolutely insane what they've done. And I'm going to put a link in this one article. I'm going to put a link in the chat so you guys can see this one article in 1 second. But what I was going to say is I think Elon Musk will create something that if it's a competitor to Sirius Satellite or what have you, because he owns all the, he owns SpaceX too, that's just going to be so much higher margin for Tesla. There's going to be something where the cars communicate with each other, and there's going to be way higher margin for Tesla. So basically, get these little cars get these basically Google on wheels out there. Get another million cars out there basically, and then deliver a service that's $20 a month. And most Tesla subscribers will buy it. And you're talking extra $20 million a month. That's where I think he's trying to go with it. And the car is the loss leader, and the service is the profit maker.
Before I let you go, I just want to pop in one thing here. And on the show, we talk about technicals, we talk about fundamentals, but he used a very important word. There's not a catalyst. The stock just had earnings, and the earnings weren't good, right? So are people going to be, after not a good earnings report, people are going to be running out and buying the stock? No. So that's what we try and do here on the show. Catalysts, like catalyst for GE. Well, it just goes down every day. There's no catalyst for this to go up. You had some insider buys. So that's the thing, a really important word is, if you want to own the stock, do your homework. What's the catalyst for Macy's right now to go up? Their real estate portfolio? And you got to look for it. That's a really important word. So, all right. Anything else, Jason, you'd like to add?
One other thing. So, Aviator One. Do you use our Benzinga Pro service too? I don't know if you do, but I agree. We put a face on. We put a face on the. By doing the show, you guys get to see us behind the scenes. We may do more video if you guys like it. Let us know in the chat if you want us to do more video during the day. But on Tesla, there was a company, I can't think of the name, a famous guy who was trying to do a Tesla competitor like 5 years ago or 7 years ago, and they raised a ton of money, and they were just trying to make the prettiest designed car. In this industry, designing the car is not the problem. It's designing a car that can be efficient and go travel for 300 miles. Tesla's the only one that has been able to do that and make a battery network across, power station network across the country and across the world. So if China gets fixed at all, Joel, you're also going to see Tesla take a jump. So that's what I would say. But, hold me to it. I mean, I still like, my HubSpot, like the CRM marketing space, HUBS. I don't know if you've been following that, but I came on the show 2 years ago, and I said that's my pick of the year. Is that $67? Is that $202?
What about Restoration Hardware?
That was a good pick too, but HubSpot I went bigger in.
Do you remember the first stock that you ever put in your portfolio?
Yes, I do. And I know why. Apple. I went and sat at CompUSA and watched how people reacted to the iMac. The one with the little globe on it.
Catalyst.
The catalyst was, I wanted to see if people are going to look at Apple because the computers were beige and ugly, just like every other computer. And my theory was that with this big blue bubble on it, people would stop at the Apple section and buy them. I sat there for 3.5 hours and watched my people went and talked to, and I bought that stock. I bought 16 shares. And my dad's like, why'd you only buy 16? I'm like, because the financial advisor, like my dad told me, don't buy. I was gonna buy 100 shares. Like, don't buy that. Buy Disney. Well, Disney didn't move for 22 years after that, and Apple went from like $4 at the time, split adjusted, to what it is today, maybe $2. So that's my first story. I'm sticking to it. Lucid Motors is not the one. Is another one. It's a famous guy's name.
DeLorean?
Nope. There's another electric thing. The guy, come on, you guys know
the
this.
The chat will figure it out in a minute.
Yeah, I know.
If Spinner was here, he would be able to figure out.
Yep. All right. Well, they're trying to kick me out, but Lucid Motors is another one, and Lucid's still going. It has a very pretty car. Fisker. Who said that? Who got that? Gary. Fisker. Gary, if we had our shirts ready, we'd get your address and send you a shirt. But that is Fisker Automotive. So basically, Kleiner Perkins could have invested $40 million in Tesla at a $200 million valuation, or actually less. No, at a $40 million valuation, they could have invested. I forget the exact number. Well, they chose to go with Fisker. And Elon Musk was in an interview like 3 years ago and goes, guys, if the problem was the design, then I think we would have had electric cars a long time ago. The problem was making this thing work. And Fisker basically, blew up in a bad way, and Tesla took off. The investment that Kleiner would have done would have been worth like 22 billion or something, and they were going to put in like 2 million, and it would be worth 22 billion. They didn't do it. They did Fisker instead. So guys, you maybe be upset about your stock picks and changes. Like I sold Amazon at $7 a share. Okay, I'm upset about that. Well, Kleiner Perkins, this guy John Doerr, could have invested like 2 million into Tesla, and it would have been worth like 13 billion today. There's an article on Benzinga about that, but I can't find the link right now. So that's
okay.
me.
Jason,
Thank
great.
you.
We're gonna have to get you on more here. bring Spencer on to wrap things up here on this Friday. We want a little extra for you folks, but great segment, Jason. Thanks a lot.
Thank you, guys. We really appreciate you guys all. If you have any feedback, send my way if you want, any ideas. Jason at Benzinga.com. Yep, thank you.
All right. Market's helping Dennis out here. Dennis?
Not that excited. It's down 5 points. It's up 25 still. So obviously still underwater on some of my shorts, but trying to work out of them.
Okay.
All right, that'll be it for our show. Thanks to, I guess, both our guests, Ryan Detrick and Jason Raznick. Glad we solved that mystery of where the name came from. Any questions, comments, concerns, email us, premarket@benzinga.com. Catch our podcast, available wherever you get your podcasts, or rewatch our show on YouTube. Please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Joel, you got
I
something?
just want to say one more thing.
Go for it.
I have a little surprise for you guys tomorrow.
Oh, dear Lord. Okay.
But the first week wasn't, was bad. The second week was a little bit better, but I have cleared the new segment tomorrow
with somebody?
With 2 people.
Okay. Good.
Okay.
Good.
Well, 3 people actually.
Okay.
Dana and Garrett, my daughter and her fiance, and Jeremy.
Okay.
And they all did extremely well on this.
Okay.
Okay.
All right.
So are you gonna be prepared?
I'll be ready. I'll be ready for tomorrow. That'll be it for us today. Have a good one, folks. We'll see you on Friday.